IZ Corp Radio, 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 IZ Corp Radio. Ladies and gentlemen, IZ Corp Radio is back in business. Great news. So we have a new segment here. It's called Just the Facts. So we're looking at the stock market, of course. It's all about the stock market here at Just the Facts. So what comes to mind is liquidity, leverage, concentration. I don't know if many of you heard of concentrated ratio. Now that's the percentage market share attributed to a given number of the largest firms in the industry. And when I think like that, I think financials. You know, the too big to fail companies. So again, this is I, Lord Ibo Risi Hodge. You're listening to IZ Corp Exchange Radio, IZ Corp Radio, and this is Just the Facts, a new show we just got going on. So we got a lot of ground to cover, so let's get started. Like we said, the stock market, stocks. Another area that's getting a lot of interest is the aerospace and space equipment. So you might want to think of that when you think of technology. A lot of people now are doing stock trading businesses. I don't know how it's going to get regulated, if it's even being regulated. A lot of people are coming to me and they have concerns. They're upset, not just because people can talk about it, and they say, well, maybe they're not supposed to be able to talk about it. So moving forward in the U.S. stock market, mainly where we're focusing here is you want to look at compliance. You know, are we going to be seeing any kind of regulation or deregulation or anything? Because this is a good business and a lot of people are really into it. So we have to look and say, well, people are going to have to comply with, you know, programs or, you know, mechanisms that make their company safer from outsiders, you know, influence and stuff like that. So we want to, we're going to be doing some homework on that too. Again, this is Lord Ibo Risi Hodge. You're watching IZ Corp. You're listening to IZ Corp Radio, and this is Just the Facts. Another thing, when I think comes to, when compliance and stuff comes to mind, all of a sudden, you know, the first thing pops in my head is Oxy and Dodd-Frank reform. So it doesn't mean that reform deals with the people trading in the market. It means that the way that regulation came about, you know, that surrounds the industry. So you'd have to be thinking how, because I'm not gonna argue it. I'm just gonna tell you, it's sooner or later it's gonna happen. It may happen. It's more likely to happen because people, it's like the Wild Wild West out here, you know. And I'm not necessarily wanting it to happen, but people are coming to me and they want to talk about it. So we talk about it here at Just the Facts. Your market like to see more sensitive type of easing. I think the last interest rate was really harsh, coming off of the COVID-19 and all the stimulus money that went into the economy, just shocking the market with the interest rates. We think that was harsh. So we were looking for maybe a different type of quantitative easing that would just let things be more orderly and gradually. But then with that being said, you know, there's a flip side to that because there's a lot more participants. There's a lot more money. The stakes are higher. So this little interest rate, if it shocks the market, it corrects itself 15, 20, 30%. That should just be normal. But at the same time, I would, if I was in that position, I would just leg it in. You know, plus you have the Ukraine war. Oil is going through what is it, 120 a barrel right now? And you know, you got all these things going on, and then you just shock the market with an interest rate hike like that. And we're not in a interest rate free environment anymore, but still, you know, that's a lot. In 20 years, it may be past due or overdue or demanded, but it's a lot with what's going on. A lot of people are interested in that, and it will cause a culture shock to the investment world. And the tone reflects the pre-crash of 2008, and that just brings a lot of panic, a lot of sick feelings to people's stomach. And you know, the risk will be immediately. You feel the risk immediately. The regulation going back to the financial regulation, is not fully implemented. We still say the last administration was deregulating it. I don't know what this administration's doing. A lot of people say throw it out completely. The recovery, what was going on, especially after the 2008 crash. Now you have the COVID-19, the health issue. Is it enough to support an interest rate hike and we're looking back at 2017. So if you're following a different curve or a different mandate, you would say this should have happened in 2017, not 2022. So the Fed has once again come out in the light to quickly announcing anything about interest rates. So they come in, they shock the economy with the biggest interest rate hike in 20 years. The economy, as they said, is expanding, but I would argue that it's still weak. Banks need to do more stress tests. That needs to be more open, not more like behind closed doors. With the U.S. financial institutions, I would argue it needs to be the people put their money in the banks down the street. So this is where their money is. The avid investor puts his money in the bank. They get their paycheck, their direct deposit, they put it in the bank. Anything going on with the government doing business with the banks should be open on the table for everybody to see and to learn and to understand what's going on and why are they even putting their money in this. You see what I'm saying? It's like when it comes to the banks, like you said, a stress test. When was the last time you heard a stress test? It should be regular. You should know all the CEOs. They should all be household names. This is what the U.S. people are putting their money in the banks. So we still say the economy is weak because of that. And it causes an irritability sense of security with people's money. And then when you shock the market and the market goes down, there's a more panic. And one thing we don't need here in the U.S., United States of America, we don't need more panic. I think we all agree on that. I mean, it's fun, for the doom and gloom people to come in. It's fun for people to speculate. It's fun to laugh you out the market when you over leverage or you get your margin calls. But it's not fun when you see people suffering and then you look and you say, man, them people might be hungry over there because they invested their money in this vehicle, which is a short, and the market just went off on them like that. So the interest rate hike is mainly the main talk, and the economy needed, it's unneeded. The economy needs to anticipate. The people are investing their money. It's not just the government investing their money. The people are working hard. They're investing their money. They need some kind of heads up. They need to understand this is my money. When I can't work, and especially the baby boomers right now, or people going to college, I'm investing this money. I need to understand my money is going to be safe. There's no guarantees, but the government should be more looking out for the people, and even the financial institutions, because they're not giving you any heads up of what's going on. So then it comes a liquidity issue. When this stuff happens, you see your 401, you want to run to your employer, you want to run to your 401 bank, and you say, let me get my money. So, the government comes in and then they stimulate, which is supposed to be a supplement. It doesn't leverage any ratio, and subsidies in relation to bailouts, when they're too big to fail businesses, it looks like that's coming back around again, because we don't know if they're good or if they're bad. We don't know what happened to them during the COVID-19 strike. If anybody has any insight, you just hit me up at izcorpexchange@gmail.com, or you go to our blog and you just find just the facts and you share your opinions with us. Because the way this works is everybody gets involved. That's how you solve problems like this. I need to know what you're thinking. You need to know what I'm thinking. You need to, not what we're doing, but you're bouncing ideas off. If you just let one person do it, they're just going to set the tone, and it really depends on what kind of mood they're in. So it's like, the new religion, they say action. You have to take action. You have to take action in this. Again, this is Lord IBO Reese Hard. You're watching you're listening to CORP Radio, and this is just the facts. So, you have eternal in economics, public finance, and then you have a price theory of where you're going to set things, your yield dates, your mandates, and so forth and so forth. Rating agencies play a big role in stuff like this because they set the tone of, oh, this company is doing good and this company just posted this and we give this a buy. One thing at CORP Exchange, Lord IBO Reese Hards will never give you a buy, hold, or sell recommendation. I just don't do it. That's how I was taught not to do it, so I don't do it. I'll give you research, I'll give you numbers, but I'm not going to tell you buy this stock, sell this stock, or hold this stock. I'll tell you what I'm doing, but I won't tell you what to do with your money. That's a part of the market metrics, the rating agencies, and again, like when these things happen, you want your liquidation to be orderly. I don't know if this is orderly at all. It might just be a correction. So you want to keep in mind stuff like that, And furthermore, you got this stuff. You got GDP. You got Earth's blood coming in. You got population, which flips you over to unemployment. Then this does not entail the what's going to happen over there. This doesn't entail what will happen over the next 2 to 6 years. Even if there's a shock to the goods market, which there is with this Earth's blood going up, before it was going down significantly, now it's going up, the sentiment will turn consumers inward and the economy will lack stimulation and the inflation will just have to continue. Where does this leave the economy? Well, if you don't have to fight, you don't fight. For persons who don't drive to work, that doesn't matter. They're not facing the gas at the pump, or maybe nor would they care. So middle class America is once again under heavy fire. Well, this is the part everybody likes. Super wealthy and poor people literally live life of Riley, not paying any attention or paying any taxes or worrying about anything. So we always argue that middle class America is the target. They're getting this squeeze out because less fortunate people, or you say poor people, they don't really pay a lot of taxes. Wealthy people, everybody knows the secret, the cat's out the bag. They don't pay any taxes either. Big businesses, the government pays them. The person who pays the tax is the middle class working person within the mean or a little above the mean. So you gotta check that out. Are we in a recession? I don't know. You replaced 8 million jobs. The economy looks ideal because it's expanding, but at the same time, I argue it's still weak. And it would take for the employment market, it would take at least another 2 years to figure out, especially after the shock of COVID-19, or we call it the plague. Well, you have to really think, well, a lot of people didn't work, a lot of people collected unemployment, a lot of people lost their businesses. Then the minimum wage hike comes in. I don't know where it is where you're at in the world, but it's what, $12 in the southern part of the United States, the southeast part of the United States. So you got to look at that too. So that deals back to corporate earnings, and with the COVID-19 or the plague, we say that was all event driven. All event driven. There was no corporate growth for over a year. The U.S., in my opinion, would have got a downgrade. They went down to 20,000 on the Dow Jones Industrial. So I was already putting in for a downgrade. Duralison and Co., a member of the CORP Exchange, a good standing, a rating agency, was already giving the U.S. economy a downgrade for that. And that's mainly, it's not to knock any administration. This is not politics. We're not doing politics because they're not prepared. If you're sitting back and you're looking at the real world, how many people are traveling into China every year? How many people are traveling into South Africa or Brazil every year? Only those people who live there and and people who do business here. People in the United States of America, it's a hub. People are coming from all over the world, legally and illegally. And you know, there's human trafficking, there's drug trafficking, there's chemical war. I mean, there's Lord knows what's going on out here. So you would think, damn, I have a transient economy. I need to be prepared for anything. A bomb going off, a dangerous plant coming in, some runaway gangs running from their government seeking shelter in my country, but the economy was just not prepared. So that's why when then your stock market feels it, oh, I'm gonna give y'all some hush money or some, you know, here's what do you call that stuff you give the babies? Here's you put the sucker in their mouth. Here, just cool out. No. You know, you have to own this shit. You know, blame China, blame the clouds, blame whoever you want, but you were not prepared. The government was not prepared to deal with anything like this. And, you know, 70, 80,000 people every year die from COVID. I mean, from the flu anyway. So, you know, you already have to be thinking, that's a lot of deaths just for a cough. So we're looking at a global recession or a correction. That's the question of the day. Are we in a global recession or are we in a correction phase? Stock prices are being priced properly now. That's going to happen through the interest rates, which is a plus for the U.S. economy. And volatility is still ruling the economy. We have a lot more to cover here at Just the Facts, but for right now, since it's our first show, we're just going to cut it short right now. Again, you're listening to Just the Facts on the one and only CORP Radio, and this is Lord IBO Reese Hodge. Thank you and have a very, very blessed day. Goodbye.